Bitcoin, we talked about the wedge pattern here. I took away one of my lines because it was a little much for me. That's an emotional reaction. Being a fan of a stock, there's nothing wrong with it unless it impacts your decision making. All right. My job is to look at everything. Like Robinhood's chart could be a chart of XYZ. It could be a chart of oil. It could be a chart of gold. It could be whatever it is. It doesn't frankly matter. I have to look at everything objectively and say, okay, based on this chart, if I looked at 100 or 1,000,000 of these charts, what is the probability that it's getting closer to a pullback versus another leg up? And of course, probability, remember, is never 100%, right? I aim to be 70 to 80% success rate. Right in that zone is like a sweet spot where you can make a lot of money in your investing career if you just stick with that.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Gareth Soloway breaks down Bitcoin moves, market trends, and what's next. Stick around to catch every sharp insight.
But this is a very important line here. Notice how we came down right over here. We hit it. We kind of consolidated. We hit it yesterday. And now Bitcoin again is right on that level. If we break here, you'll have some support between 102 and 100,000. If 100,000 breaks, we should go straight down to about 95 to 93. All right. So again, notice the trend line. This trend line is working. Also notice the bigger wedge pattern. So price of Bitcoin is in between the wedge right now. But the key is you're watching to see which way it breaks. I personally am in alignment that in general wedges, they basically are like a pressure cooker. And so when it breaks, it doesn't tend to just break a little bit. It tends to get a bigger move. So for me, that would probably tell me that we probably, if we do break down, we go through this first level of support at 102 to 100 and probably retest this 95 to 93 level, at least to the downside. All right, let's take a look at gold real quick. Gold today is basically flatlining. Again, you saw the sell-off on Monday on gold as things calmed down a little bit in the Middle East just for a day. Now gold, again, we haven't seen any real escalation there, but the U.S. threat is there to potentially get involved, and that's keeping gold going sideways. Overall, remember, you just look at this. Doesn't matter if this was gold, silver, or, rocks or whatever. It doesn't matter. You look at the chart objectively, and what we see is that the chart still remains above the longer-term upsloping trend. Therefore, the overall bias remains bullish as long as you hold this area. And I'm going to even take this one away. I'm a big fan of this longer-term line here. As long as we hold this level, then the longer-term and midterm and even short term would be looked at as bullish, even if we have a pullback along the way down into that level.
Bitcoin is showing signs of strength as the Federal Reserve holds interest rates steady, potentially giving BTC a fresh boost. New research from CryptoCoin highlights how this macroeconomic pause, combined with shifting trends in crypto derivatives, could fuel a rally. Historically, Bitcoin has thrived during rate freezes, and analysts believe 2025 could bring even more bullish momentum if current conditions continue. According to CryptoQuants and Murtaha, Bitcoin is holding strong above $104,000, repeatedly absorbing selling pressure. Meanwhile, open interest on Binance is dropping, which shows traders are unwinding their positions, a sign of cooling leverage in the market. This divergence between steady price levels and falling open interest often sets the stage for upside moves. Liquidity data also suggests a potential short squeeze, with major sell orders stacked near the $106,000 mark. If momentum builds, BTC could break that level quickly. All eyes are now on Bitcoin's next move as macro trends and market sentiment align for a possible surge.
You can see, again, we broke here. Here's Friday. We bounced on Monday and came down on Tuesday. And basically now we're on Wednesday. And since nothing happened yet with Iran and the U.S., then the likelihood is, for the most part, markets will be in sideways chop mode until we get the FOMC policy statement and the press conference later today. Taking a look at the 10-year yield, the 10-year yield has just been kind of chopping as well. We kind of broke this key level of support. We went up, we went down, we went up. Now we're coming back down. And obviously, you would expect here a bigger move once we get word from the Fed. Like if the Fed changes their policy or at least their guidance for the market, then you're either going to see a pop on yields if they're more hawkish or a bigger drop. And by the way, speaking of defined floors, there's a very defined level here at 4.32 on the 10-year. If that breaks, then you're coming down to 4.26. And if that breaks, we go all the way back to 4.13, this low pivot here. Now, a couple key tidbits of news out this morning. So obviously, we talked about the U.S. and Iran. We've talked about the Federal Reserve. This morning, we did get jobless claims. Now, jobless claims are usually reported on Thursday, but because Thursday is a holiday, they got reported today. The number came in at 245,000 people filing for unemployment. Last week was revised up slightly to 250. Now, again, these aren't numbers that are really like, oh my goodness, we're seeing a massive amount of people filing for unemployment. We're definitely going into a recession. These numbers aren't telling us that yet, but the trend has definitely changed. If you go back a month, 2, 3, 4, 5 months ago, we were hovering between 210 and 225 on people filing on a weekly basis for unemployment. We're now seeing the 4-week average around 240 to 242. And so there's definitely an upslope here that we have to be aware of that, again, if it were to continue, let's say next week we go above 250, then 260, then 270, that, again, is a trend change that you need to be aware of. It doesn't tell us that we're flying at breakneck speed at hypersonic speed into a recession, but it does tell us that we're inching to a weaker jobs market, a weaker economy. All right. Back to the charts we go. And by the way, we also got housing starts. Housing starts came in much, much weaker than expected. But again, I don't think that's a surprise to any of us when we think about it logically. Again, with interest rates on the 30-year where they are, the housing market is in a lot of trouble and continues to be.
Bitcoin's price has been stuck below $112,000 since late May, and a mix of global tension and cautious monetary policy is keeping it there. The $106,000 level has become a major wall, with several attempts to break through getting rejected. Over the past 5 weeks, BTC has traded within a narrow $10,000 range, showing little sign of a breakout as traders remain cautious. Rising geopolitical uncertainty, especially the conflict between Israel and Iran, has pushed investors towards safer assets like gold and U.S. Treasuries. Meanwhile, Bitcoin has lost some of its shine, dropping around 3.6% since Israel's recent military actions. The hacking of Iran-based exchange Novatex for $81 million by a pro-Israel group has added to the tension, underscoring Bitcoin's vulnerability in cyber warfare scenarios. Adding pressure, the Federal Reserve's decision to keep interest rates steady has cooled optimism in crypto markets. With inflation still sticky and rate cuts pushed further out, the dollar is strengthening, making it harder for Bitcoin to rally. Technically, BTC remains below key moving averages, including the 150 and 200 period SNAs, which have kept price action compressed. Low volume and a weakening RSI around 46 suggest indecision. Unless Bitcoin breaks above $106,000 convincingly, it may stay stuck, though a sudden short squeeze could flip the script. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.